So, um, I just watched some of the previous videos so I can understand like depreciation in particular. Um, so like this is actually incorrect. Like you would not have this um, on the balance sheet. This is not how you write it into the balance sheet. You can write this in as a journal entry, obviously, and the depreciation expense of the specific asset itself, and then the accumulated depreciation. Um, suppose we can do that. But like the thing is, the dividends they actually get minus from cash count. So not exactly sure how you would do it. Like you'd be like, oh, is this like depreciation expense? But like in the balance sheet, most likely you'll just have like this thing because like you'd be like, oh yeah, this is the depreciation expense for this specific item, this specific asset, right? Like let's say you would have like a depreciation account, um, like in the journal entry, you have the depreciation account, and then inside the depreciation account, you would have depreciation expenses, right? You would have depreciation expense for item one, and then you would have like the accumulated depreciation item one. You know, this journal entry pretty much like you would have it like this. Like this is, and then like you would have depreciation expense for like the item two, item three. That's like how it would show up in the journal entry, and then you would have to like debit or credit it. Be like, oh yeah, this moves it up in the assets. Blah blah. But like once you write this into the balance sheet, you wouldn't like individually, uh, like for example, like this. I mean, you could write it in the balance sheet like this, but like um, most likely what you would have instead, it would be all under one thing. Like it would be like purchase. Is this like equipment? Yes. Then like for example, then you would be like, yeah, this is actually um, like that. Because like this is you would not have this like out there individually. Um, you know. And then like if this is it, then like you would be like, oh, where does this go into? I don't know. Like retained earnings. Like we'll have to like talk about the balance sheet again, so I can figure out like what this stuff is again. Essentially, you would just have an appreciation um, of like all the assets, and then like the total of all the assets depreciation. And actually, this depreciation comes out of the cash cow. So like, let's say like yeah, that's all you have. Depreciation 14,400. Okay. Um, then like this depreciation account also gets minus from the retained earnings account, like such. Okay. Like such. Purchase equipment. Okay. So you guys can see, um, that's what it would look like in the balance sheet. Okay. And then like, if you guys like be like, oh yeah, like how does this work again? How does this stuff like how does this work? Then you guys remember like there's this income statement that you guys have to write up based off of like all these different things. So like calculated throughout the year. One of those things are gonna be like the depreciation. where the balance in the income statement, you wouldn't necessarily like calculate it because like there's certain things that you care more about in the income statement. Like I write this like income statements, like these financial statements are more important for me to like file like 10Ks and 10Ks. But you would have depreciation and amortization just be one little part of the overall operating expenses. So then it wouldn't there wouldn't like sometimes you wouldn't even have this written out. You would just have like this operating expense, or like you would just have the operating expense and the operating income. But you would write it here the depreciation. Okay, you guys write it in the income statement. But like that's what it looks like when you write in like journal entries for depreciation. That's very important. Like how do you calculate depreciation? You know, whether it's like straight line depreciation, whether it's double declining, whether it's like based off of units of activity regarding depreciation, and then it's like this is like depreciation for assets. Like if it was like a depreciation for like copyright, so copyright is still considered to be assets, equity. But like when you calculate depreciation for physical objects rather than like something like copyright, because if it's like copyright or trademark, it would be amortized rather than depreciated. If it's like some kind of natural resources that can be depleted, you know, you like calculate depletion rather than depreciation. But when you guys calculate depreciation, amortization, or depletion, you guys write it in the journal entry, like you know, like I'm gonna debit this for like the depreciation expense, debit this, and I guess it like you know, you guys can see it will, you know, decrease it like in a specific part of the balance sheet, retained earnings. Because like the depreciation is going to decrease retained earnings. It's like retained earnings is essentially is the equity. Like how much the owners are going to get back. It's like, oh, this retained earnings, not liabilities. But it's going to lower that amount, like how much they're going to get based off of like the depreciation expense. Talk a little bit more about this. It's like it's kind of hard to like wrap your head around it. You have to like get really get used to like understanding how this like language works, language accounting. But like you put that depreciation expense, um, and then you have like the accumulated depreciation in total for that entire item itself, which will lower the accumulated depreciation for the asset in the asset column. And you can just credit that because like if you debit equities, then it goes down. If you credit assets, then it goes down. But then like you purchase this um, asset, and you have the asset in the in the in the the asset column, as you know, and you increase that with like debit. Does that makes any sense? This is mainly like that's journal entries, pretty much. It's like that's how it works in the journal entries, and then once you guys like at the end of the year, you look at all the journal entries, you tally them all up, and you put them in the balance sheet. You know, like for example, you'd be like, yeah, you know, 14,400 depreciated that as the depreciation expense if it came out of cash. You know, well, I mean that's the depreciation expense is like retained earnings actually. You know, debit that retained earnings, but then like the accumulated depreciation, um, you know, you put that in the you put that in credits, the assets, so it decreases the assets. Um, so like if there was like another truck, you know, they didn't sell it. It's just like that's like another truck that they have. You know, you would have to add those together, and then you would just have to combine total depreciation expense. Well, really, it would really be sort of like accumulated depreciation total of all the items that are being depreciated. The total depreciation of everything would really be like what the depreciation would be in the balance sheet. Because you wouldn't be like, yeah, depreciation of this and depreciation of that, and it wouldn't be like that in the balance sheet. It would just be like depreciation total of everything, the total depreciation of everything, of all the accumulated things. Oh, and then like you would write that in like operating expense, like total depreciation of all the accumulated items of everything. You see, but that's how you would write that in the balance sheet, like how like you create like these journal entries for calculating and like keeping track of depreciation, and then like how you would write that in the balance sheet, and then like how that would show up in the income statement. I don't know if I have to make a video about depreciation, like how to calculate depreciation, because it's like, I wouldn't say it's like super easy. I might make a video on it. I think I already have a video on it. Honestly, that's like the thing. I don't want to like make another video about depreciation if it's already out there. So I don't know if I'm gonna do that. And like really, how I like figure this out is watching my old videos and like accounting. So accounting, previous accounting videos. So you guys can watch those videos and like it help you like figure out like fill in the blanks for a lot of stuff, because a lot of this stuff now is just like going more in depth for like specific things. Like before, it would just be like, yeah, depreciation totals this. But now it's like, okay, why don't you calculate depreciation for all these things and then like have it accumulated in the journal entries that we're accumulating, and we're like calculating the depreciation expense for specific items in the journal entry. And then like we're getting like this total, and then we're gonna add it into the balance sheet. Now we have the balance. Now we know how like this number came out with depreciation in the balance sheet. That's really all it is. So I don't know if I want to make a video, because there might be a video already on it, on the straight line or double declining. So if you have any questions, then feel free to reach out.